Well, I'm super excited to be joined again by Kim Schneider from Deloitte. Deloitte is one of the world's largest professional services organizations. And this is the second time we've had Kim back. I wanted to give a huge shout out to the Hashgraph Association for helping us to put these podcasts together. But there's a lot to get into today, Kim, so I'm going to hop right in. Deloitte works with, as I mentioned, some of the world's largest financial institutions. From where you sit, what has actually changed in the conversation around DLT and on-chain infrastructure this past year? And feel free to give an intro of yourself too as we kick off here.
Thank you. Yes, my name is Kim Schneider, and since 4 years I work at Deloitte, and already for almost 10 years working in a professional way with blockchain and digital assets. And like you said, what changed last year is mainly regulatory, right? So in the US, we now have the Clarity Act and the Genius Act, which is setting the scene, and the US is really pushing stablecoin adoption. So that helps. But also here in Europe, we now have the marketing crypto asset regulation. And this is also really, giving borders and a framework mainly for institutions to move into. And that's really important because we always say blockchain is decentralized. It's not with the middleman. And yes, that's true. And that's possible. But in a professional enterprise setting, we see that corporates really need these boundaries and really need to understand where they can move between with regards to risk and compliance. So the regulatory borders are really good for them, to move further the last year. So that's what's really happening now.
Yeah, and I think that we see a lot of different entities getting into this space. So obviously, we were talking before this. I mean, it's been really interesting the past 12 to 18 months to see the really big financial institutions kind of verbally say what they're interested in. But obviously, we still have a long ways to go as far as compliance and regulatory clarity is concerned. But beyond the financial institutions, kind of the low-hanging fruits, you guys work with so many entities. Who else is being pulled into the conversation of blockchain and distributed ledger adoption? I mean, I guess from where you're sitting, what does this tell you about where crypto, DLT, digital assets, where everything's kind of heading?
Yeah, I think those are different kinds of companies in different sectors, which is really good, of course. So I think next to the big, large banks, we also see the payment service providers are moving fast. So they are looking into generating their own blockchain systems, their own layer ones, also creating their own stable coins on top of it, seeking if they can become a bank as well, right? So seeking for licenses. We also see the crypto natives are looking for that. Should we partner with, or should we buy a bank or get a license ourselves? So I think there's a lot of movement. But also on the enterprise side, we have a lot of interest here from corporate treasurers and CFO offices that are really looking into, okay, how can this new infrastructure with regards to stablecoins, optimize our cash positions? So there's more traction on the enterprise side, where in the past we saw like digital product passports or creating more transparency in supply chains. Now with the stablecoin case, it's really more concrete. It's a tangible use case that's really understandable. It's something everybody understands because everybody does payments every day. So I think that's a really big chunk. And of course, around that, you also see some movement with asset managers. And of course, also here in Europe, the regulation also changed. So also the central banks are looking into it. Of course, also with central bank digital currencies, but also with regards to this movement, mainly on the payment side. So a lot of traction across these different kind of sectors and companies.
So I think you mentioned a key phrase, which is institutions, payment service providers, they understand stablecoins, because that's been interesting to me. And that's where I think, I know a lot of people have different opinions about stablecoins. I think I'm always curious, in 5 years, is my local library going to have a stablecoin? I'm like at what point, is it, is everybody just going to integrate? But I think you bring up a really interesting point, which is people understand it, meeting users where they're at, meeting payment service providers or institutions where they're at. Is that kind of one of the ways that you look at, outside of the utility of what stablecoins could be used for, kind of like this intangible effect of breaking some barriers down for actual adoption, because people just kind of get it?
Yes, I think people just kind of get it. And if you start at the payment side and you integrate and implement the technology and you have it in place, then it's easier in your next step to also offer maybe other kind of crypto services, or to buy a bond that is tokenized or security that is tokenized with your stablecoin payment infrastructure. And also to watch all those decentralized finance cases, loans, that there are many tokenization cases, and they already exist for years, but I think there will be more traction indeed by the adoption, at least now, of stablecoins that make it more understandable, and then also that companies can take the next steps that you can do once you adopted these stablecoins. Yes, I believe that.
So, another area, and I didn't have this in my notes here, but I think that we've seen a shift in kind of the private versus public, like willingness for entities to come and engage with, public networks versus just pure kind of private plays. And that's been something, obviously, on the back end of the Genius Act in the United States. And as we are seeming to get a little bit of clarity, what are your thoughts there? It seems to me like there's obviously going to be areas that just have to stay private for enterprise and institutions that are probably always going to be private.
Yeah.
I've done a couple of the interviews where it seems like enterprise and institutions like almost like the transparency that the public network kind of gives you where it makes sense, as well as obviously like things like liquidity and things like that. But where do you see that carryover between private versus like public kind of environments? Are you seeing that like in your discussions with different entities and things like that?
Sometimes, I would say, because a lot of companies are not there yet, right? So also first thinking about their strategies and how to implement and what kind of stablecoin to use. And of course, then you come into this topic of privacy. I think it's very important for most companies to have this interoperability possibility and also enough liquidity in the market. So I think those 2 points are more important to them. But yes, you probably don't want the whole world to see what kind of transactions you're doing on a daily basis. So that's indeed a thing. But also curious, indeed, in the Netherlands or in Europe, we have now a stablecoin consortium consisting of 12 different banks. It's called Kifalis.
Okay.
And also curious what kind of choices they will make there, right? Because we have some Euro stablecoins already out there. But also considering these are very big banks in Europe, curious how they will take a stance in that and how they will develop their coin also for enterprise adoption and also with regards to privacy.
Yeah, I think you mentioned what some of these different entities and how they're looking at leveraging stable coins and how they're looking at digital assets and kind of corporate treasuries. Like, what does that discussion even look like right now whenever like I guess the question I have is like, how does Deloitte help these entities navigate? Because I'm sure, like you mentioned, there's a wide variety of discussions. I'm guessing that sometimes you start at square zero and you have to be like, this is what blockchain, I mean, maybe not that to that level, but what is that experience like and how do you guys engage and what is the interest level? Like, how are kind of these firms engaging with things like corporate treasury and digital assets?
Yeah, so I really think banks and also treasurers see stablecoins as a settlement and liquidity tool. And that's compared to crypto, right? A not speculative asset. And most important here is, it's not about the technology itself mainly in our conversations. It's more about the governance, how to integrate stablecoins into your daily infrastructure. What about risk management, compliance, current regulations? So integration of all these kind of topics, right, around custody, all the complexity that comes with it, and the regulatory frameworks is something we work on. So we create internal alignment, to say so, within these companies, and also make sure these different stakeholders are aligned, so that not only we give them like the regulatory and compliance and risk advice, but that they also incorporate those colleagues within their firm to discuss how to implement, how to create these kind of policies and what needs to happen. So that is where we come in, right? Mainly we start at the strategy side. So what do you want to do with stablecoins? What is your plan for the coming year and years? So if you are a bank, are you going to offer stablecoins to your enterprise clients, or are you also going to offer it on the retail side? Are you considering using it intercompany with other kind of banks? So these are the questions that are then on the table, and then mainly they choose one of these scenarios, and then we can take it from there. But yeah, I think mainly it is all about all the other aspects outside of the technology itself. And of course, with regard to technology, you also need to make some choices, right? There are so many different blockchains, so many different stable coins, so many different custody providers. Do you want to have it all in-house, or do you outsource the different kind of elements? But that's, that are all the different kind of topics that we're helping our clients with at the moment.
Yeah. And I like my understanding, I guess, with, I think that Deloitte and, there's a couple others, but this is a Deloitte interview, so we'll focus on Deloitte. You guys sit in a really interesting position because it's almost like middleware between the solutions providers that are like super Web3 native and the very traditional entities where obviously Deloitte is an agnostic entity. You guys will work with whatever clients for the best solution possible.
Yeah.
So that's been interesting to me because I think one thing that I've kind of heard is that, which you also mentioned perfectly, I think a lot of the times when you're in crypto, like every day in crypto, people like seem to make the technology portion of it super important but you mentioned like these enterprises and corporates don't necessarily care about the tech. They probably care how it's going to solve pain points for them or streamline processes or whatever it is. So in that regard, like obviously we know there's been proof of concepts over the years. One thing that I've heard is that for more mass adoption to occur, we need to be able to kind of rapidly deploy prototypes and like solutions. Yeah. I think that that's been happening. I think obviously with AI, that's been happening probably more, but has there been an evolution of being able to like, okay, Deloitte engages with entity X and entity X has problem, A, B, and C, where it becomes a lot easier to be like, okay, here's different solutions that work for you compared to like 3 or 4 years ago? Has that rapid prototype kind of, what's the word I'm thinking of? Like the rapid deployment of prototypes, is that a thing? Has that been happening quicker and quicker, or is it still a very kind of long drawn out process?
Yeah,
that was the longest question that you've ever gotten in an interview, by the way.
Yeah, you were also setting me on like two thoughts. So I think on the one hand, you see more providers, right? So you have also more choice. There's also more maturity in the market with regards to different players out there on the technology side. So that's good because there are more options, but also more players that are already for a longer time in this business. So that also creates more trust. But on the other hand, yes, I think indeed it's nowadays easier to do a quicker proof of concept or pilot. But with regard to next steps after that, you still have a lot of options, right? If you are a bank, you can start developing yourself. You can buy a player in the market. So I think with regards to overtaking other companies, there's also happened a lot the last 1 or 2 years. And I foresee as well the coming years that there will be more acquisitions in the market because a lot of players are already out there for a longer time, and if you need to build from scratch, it takes you a longer period of time to create it yourself. So why not partner or buy something that's already out there in the market? But still taking the next step from pilots to implementation, right? I think it really depends on how big you want to deploy a product or service. We see, at least here in Europe, that most companies are still starting kind of small. So starting with one offering or maybe offering a few crypto products, starting with an exchange traded fund or an exchange traded product and take it from there. But yeah, I think it can be moving quicker, right, in Europe as well, because I think the rest of the world is a bit ahead of us. So it's good to align and also create more liquidity in the euro market here.
So I guess the question I have is like, we always see like the super crypto native stuff, but I know the last discussion we have, and we'll go down maybe the ESG path here in a second, but I think a lot of like the actual adoption is going to happen, not necessarily like on crypto Twitter. Like you're not like there's very real things that are happening that might not be like the sexiest use cases to like super Web3 native people, but like product track and trace and ESG and green economy stuff, or I mean, even along the track and trace stuff, trade finance and supply chain. There's all these different use cases that, at least, and this is my opinion, like will probably be impacted and eventually run on DLT, given however much time it takes.
Yeah.
But like, what are your just thoughts broadly on like the real world use cases? And I guess we'll go down the ESG path here, like maybe outside of the payments, which is real world too, but
Yes.
things like product track and trace, supply chain, ESG.
Yeah, I really still, it's one of my starting points with blockchain, right? So 10 years ago, when I first heard of blockchain technology, this was my trigger. It was mainly on creating transparency, sharing data in different kind of ecosystems and supply chains. And I still think, we might be farthest away from that cases, right? I think there was a push on digital product passports a few years ago, and it's still there, but the regulation was delayed. So then you see people are putting it on a lower priority for their organizations. Also, one of my biggest learnings here is that the market is very regulatory driven. So once regulation is in place, companies will move, and then it will become a need to have instead of a nice to have, which makes sense. But sometimes it's also nice to have some more intrinsic motivation from a company perspective to move forward with your innovation and being a bit ahead with your products. So we see on indeed the ESG side that there are lower priorities globally due to geopolitical situations, due to regulations that are also delayed and moved towards 2027, 2028. So companies are waiting a bit more. But I still do truly believe that more transparency in these markets is really necessary. And also what we learned with our environmental and social impact platform, it was maybe a bit early. That's with all we do in Web3. But all companies we spoke to are like, yes, this is the future and this is really necessary to create a more transparent market, a more equal market with regards to carbon credits and their pricing, so that you really know where your source data is coming from, if the measurements were really taken and at what moment in time, and do you have evidence of that? So the data accuracy will get higher, and with that, the price of the carbon credit gets a more realistic value. And what we've done the last couple of months is more working on the step before you use our platform. So that is on the de-risking side. So a lot of companies are still hesitant with regards to investing in nature. And we took an approach like, okay, if we can take a bit away your hesitance and create more value with regards to a bit of insurance and more standardization, how you look at different kind of data points, would that help you invest earlier in these kind of projects? And that were also very good conversations and interviews we had. And we're discussing that now on a global level at Deloitte, if we can create some kind of service that will help push these nature investments. Yeah. Also with the use of this technology, because they all really believe that is helpful for the track and trace. Also that different kind of people can take a look at it, right? With regards to auditing, different kind of stakeholders can see more real-time data and value. So we're moving there, but smaller steps than I hoped to the last time we spoke.
Yeah, I mean, it seems like, it seems like when there's so much technology and innovation happening that like we almost have these back to the future moments. Like I can remember in 2018, like micropayments were being talked about all across the board. And then micropayments like disappeared for like 4 years. And now micropayments are like very much so back again in a real way. Even when we talk about tokenization, which, you know, tokenization has been talked about in blockchain and Web3 for as long as I can remember in blockchain and Web3. It's just went through different naming conventions like every 2 or 3 years. I remember that people used to talk about like real estate NFTs, and now that it's just evolved so many times. You know, I think from the ESG standpoint, obviously you guys work with a lot of entities, but one of the ecosystems you guys have a good relationship with and have built on is the Hedera ecosystem. What has that been like, as far as seeing how that how that infrastructure operates, how different entities are looking at, like, the Guardian and things like that are built out on Hedera, maybe just in broad strokes?
Yeah, so the good thing about what Hedera is doing is that they really focus on institutional adoption and that they want to create a professional institutional chain and products, right? So compared to others, they are more focused on a broader spectrum of creating different kind of blockchain applications. So that really helped us in our conversations as well with enterprises to, yeah, generate this trustworthy technology and platform. And they also really focus on an ESG vertical they have, so different kind of ESG solutions and bringing them together, bridging the gaps, right? Having different kind of solutions for different kind of problems in the chain. And that's also really helpful. So they can really, yeah, bring together different kind of stakeholders in the ecosystem you need. Also next to the tech side. So what I experienced a lot with other blockchains is that they really focus on, we can provide you a grant and we can provide you some money to build the tech. And that's also something Hedera was focused on, because they of course want to add some new tech to their base layer. But they also have this layer of really, yeah, having conversations on strategy, on bringing it into the market, create an ecosystem around it. And that is really helpful to really bring the product further, instead of, yeah, creating a product and then it's nice that you have the product, but if you cannot sell it to the market or, yeah, co-create with others, then it's, of course, it's really hard to take next steps. And lately,
that seems like, sorry, go ahead.
No, lately I just saw they're also partnering now with Vera, and I think that's also a good thing. So they're really also looking into standardization into the market and also seeking for important parties that can combine in this ecosystem.
Yeah, I think so. So for, in case people watch and don't know what Vera is, you can correct me if I'm wrong, Kim, please. I think Vera is the world's largest independent standards body, right? As far as like ESG standards, if I'm not mistaken. Yes. And I know, like, so I interviewed Wes Geisenberger last November. I think it was November-ish. And was it COP29 that just happened, or was it COP30? So one of the big kind of, all the kind of world's governments and nations come together and talk about kind of the green economy stuff. But you brought up a really interesting phrase, which I've heard, I keep hearing, which is, at what point does all the stuff that we keep talking about become not a nice to have? Because nice to haves, let's be real, like, how seriously do enterprise and institutions look at nice to haves? It's like, did we have a good year? Oh, this would be nice to have. Versus like a need to have, right? And I do think that we're heading towards that. But, what are your just, broad thoughts on what still, I guess, needs to happen for enterprises, institutions to move from pilots to integrating all of this stuff directly into their infrastructure?
Yeah, I think a lot, if we look at least then the technology side, is still depending on standardization in the market and also the possibility for interoperability. I think when you just download like MetaMask and you want to do a stablecoin transaction with each other, it's very easy to use, right? As a retail person, the interface is more user friendly than a few years ago. But if you look on a professional enterprise way, yes, you have different kind of options with regard to your custody solution, but there are many options in the market. Then there are different kind of stablecoins, like I said. So which one are you going to use, for example, or what kind of crypto are you going to offer to your clients? There are different kind of chains. You have Hedera, you have Ethereum, you have still also Hyperledger out there. So there are a lot of different choices to make. And then also how to integrate it with your current system. So you can imagine if a corporate treasurer already has a system that he works with every day, or maybe already with 5 different kind of systems. And you say, okay, here you have this custody solution, and you have like this program where you can do your stablecoin transactions with. And oh yeah, by the way, then manually at the end of the day, you have to put in this figure into your current system, for example. that's extra handling that they need to take. So it's existing, and I really see a lot of providers out there that are working very hard to get an end-to-end solution with regards to payments, at least, for those kind of treasurers and for the banks, that they can offer more easily crypto services or stablecoin services towards their clients. But it's not as easy as we just use stablecoins with each other or want to pay with it via a Visa or MasterCard, right? I think that's the kind of easy way on the retail side. And on the enterprise side, you have more steps to incorporate also in your processes, in your policies with regards to safety, right? I think the standards are very high there, and also the expectations. If you are a bank and you're offering these services to your clients, it really needs to be very good, and you don't want to have mistakes there. So yeah, I would say the market is maturing, but also still we need some more standardization, interoperability possibilities, and also there are parties that are working on this, right? Also for stable coins, you see Ubix, for example, they want to create also a platform where you can swap easily your stable coin, so it does not matter what kind of stable coin you own or that you want to pay with. And that's where we're going towards, because otherwise you have like 10 systems, 100 stablecoins in your wallet, and that makes life not easier for the different corporates.
Yeah, I think, especially with, well, I don't think a lot of people realize, like, because I think when you're super crypto native or digital asset native, it's like, why wouldn't enterprise and institutions just adopt this? It's just such a better system, which might, like, maybe when we look out, a decade or two, maybe that's true. But I think a lot of the things that people don't realize, and I've done a couple of interviews where, a really big enterprise is like, look, obviously we're testing things, but if we turn something on and something goes wrong, this affects millions of people. I mean, it's not like, in crypto where which there's obviously bad stuff that happens in crypto, but if something goes wrong, it's affecting like, however many people are like a part of the project or whatever. I mean, it's literally like entire nations, like stuff can go wrong. Like, so it's interesting to me because I think really what we're kind of seeing in real time is this continuous stress test, while also making sure that, like, as you mentioned, like standards, because I mean, there needs to be industry open standards. This is why if you kind of look behind the scenes, you see a lot of like, in the Eurozone or in America and stuff like that, working towards things that are just going to make sense globally, because that's just how things are probably going to have to happen. So I know, as we close out here, which is kind of the low hanging fruit question, and mentioned at the beginning here, Deloitte sits at the intersection of where traditional finance and on-chain infrastructure meet. What does this moment look like when the scale, kind of finally tips and adoption is here? And maybe just your broad thoughts on what does mass adoption look like for Kim, for distributed ledger technology?
Yeah, I think mass adoption looks like when this convergence moment is when, for example, a CFO can move $100 million between different markets in seconds. And if you are a customer, you can also send money across borders for a few cents, right? And at the same time, the regulator can also see transactions they need to see or control in real time. And then the blockchain is not just a technology or an infrastructure, but then it's incorporated in different kind of infrastructures, just like the internet. And I think the internet also became a standard infrastructure. And in the beginning, companies also had to choose between different kind of networks. So I also see that for blockchain, that of course you use different kind of applications, but you don't always know anymore that it's underneath what you're using, what kind of applications you're using. And if I really look at an enterprise side, also with regards to crypto and stable coins, I really see this movement, as I said, for a CFO or treasurer, where capital markets are accessible, that you can have loans in decentralized finance. And the treasury management is for a big part on this new infrastructure rail. I think then we're really like, in this next step moment where it's generating a lot of traction. And yeah, for that, we really need more network effects, right? And that starts at our perspective with payments. But then there also needs to become more trust, more liquidity in the market before we can get there. And yeah, I think we can help there. So I think that's the good news, and we do that step by step. But yeah, I think we need to move quicker here in Europe with different kind of stakeholders to get this working before. Yeah, otherwise we only have like this US dollar dominated market where, of
Yeah.
course, also now in the normal fiat world. But it would be nice if we can gain more traction in the Eurozone as well.
Sure. No, I think obviously just my opinion, but I kind of look at what the end game is kind of like the democratization of access, like where you have as an individual, it doesn't matter if you have $1 million or $100 million in your bank account or $1,000 or $100. You're probably going to at some point be able to participate in lots of different things. I actually saw a study come out of the FCA, so the Financial Conduct Authority in the UK, like a month and a half ago, talking about the future of tokenization and what that opens up for the citizens in the UK. And it was actually a really smart study because it was saying, look, just what I said, it's going to democratize access. UK citizens are going to pretty much have access to everything. But just because you can do it doesn't mean that you necessarily should, because obviously there's a huge educational barrier. There's all sorts of things that kind of need to happen in tandem for things to make sense.
Yeah.
As we close out, Kim, I would love, if you could talk about what you're excited about for Deloitte throughout the remainder of 2026, what you're going to be up to. And yeah, we thank you again for joining, and hopefully we'll have you back later this year.
That will be nice. And then I hopefully have some nice updates. I mainly look forward, to the consortium, like I mentioned before, to Kifalis, because I really think when 12 banks in a consortium come together and launch their own stablecoin, there will be more trust in the crypto and stablecoin market in Europe. And I think that's really necessary also for the adoption at the enterprise side. Of course, it's still the case. And the question, like, what kind of use cases are the banks then generating for these enterprises or for retail? So I'm hopefully also working on that. So I'm really looking forward to also help these kind of companies with, okay, what is your strategy around it? What kind of use cases are you going to develop? And are you ready before they deploy this stablecoin? So that's what I'm mainly looking forward to. And I have really nice conversations on the treasury side. And I know they're sometimes still a bit hesitant, but I'm looking forward to do some proof of concepts, at least with them, with certain payment corridors, and that we can really showcase as well, the efficiency and what it really looks like, instead of only having these conversations on it saves you cost and it's quicker, but also more, the practical side of it, and showcase, the real added value.
Do you think that it becomes like a little bit of a snowball effect? Like once you have something that you can prove out, because obviously saving money at the enterprise level, that talks more than talking about saving money. And same, like, is it kind of this self-perpetuating?
They need to experience, and then they talk with each other. And also on this level, I know they talk a lot with each other. So I think that's indeed what's going to happen. Yeah.
Nobody wants to be first, but everybody wants to be second.
Yes, that's really the case. Yeah.
And I've got like a sidebar kind of here. Like I've seen over the past year or two, like obviously stablecoins are kind of what's on everybody's mind right now, but I've started seeing, and this is maybe just over the past 12 to 18 months, a lot more on tokenized deposits as kind of this next, I don't know if it's the right way of phrasing it, next iteration, but almost like regulated digital money that's already within the system and not having to. Have you seen that like through what you're doing too with tokenized deposits?
Yes. Yeah. So it's indeed next to the stable coins, a topic and conversation we have. The thing there is, of course, you can handle tokenized deposits under the current regulatory framework, and you have this money indeed already on your balance sheet, and you don't have to have it one-on-one, 100% cash back. So I think there are a lot of opportunities, but then we talk again about the interoperability side and where are you going to use it for? And if you have tokenized deposit at bank A and you want to have it at bank B, how is that going to work? So I think with regard to interoperability, stablecoins are more in favor, but with regards to the rules and what you can offer, they all look indeed also at tokenized deposits. And I think if you're just banking at bank A and you have tokenized deposits and you invest there in your bonds and securities and other kind of coins or financial instruments that are tokenized, yeah, it might of course be a more efficient and cheaper way. But yeah, we will see how that will evolve. Yeah.
So I never even thought, like, it never rang a bell in my head to be like, oh, there might be red tape as far as like multi-chain or interoperability is concerned with tokenized deposits, because essentially what would exist is the same thing that exists right now. It's just tokenized, right? So if there's red tape now, there's going to be red tape with that. Okay, interesting. Well, Kim, I mean, honestly, I thought this was super educational. I told you it was going to be lightweight, and we'll try to make it as painless and short as possible. But honestly, I really appreciate you being willing to come back on again in such short notice. I'll give a huge shout out to the Hashgraph Association for helping us to put podcasts like this together. And good luck with everything this year. Excited to see the consortium of banks in the Eurozone and pushing forward adoption for blockchain distributed ledger. Thank you, Kim, so much. Hang out for a second as I get this recording.